we are set up for an equity market rally into the Federal Reserve meeting at Jackson Hole at the end of the month. And I think at that point, people will start taking some risk off the table.
Hi, it's ggoernert, Vice President and Senior Investment Advisor at Canaccord Genuity Wealth Management and ggoernert Wealth Management. Now, welcome to the channel where we help you make sense out of your financial world. Now, today, I'm going to be joined by Canaccord Genuity Technical Analyst, Javed Mirza. Morning, Javed. How are you doing?
I'm doing well. How are you?
Doing really well. I'm glad we're getting some summer. I don't know what things are your way, but we've been having a fantastic summer on the West Coast here. So I think the world is kind of taking advantage of the last bit of summer that we've got here, because I do get the feeling that once we get into September, the world is going to go back a bit more to normal than we've seen for the past 18 months. Let's just talk about where we are in the markets right now. On that note, now you put out a piece last week talking that we're tend to be in a short-term technical rally right now. Can you talk a little bit about that?
Yeah, for sure. So what we're seeing here, and I think you've hit on a couple of key points, is we're kind of in the dog days of summer. A lot of people are on vacation. I know when I send out my notes that a lot of people, I'm getting a lot of out-of-office replies. So what I would say is we are set up for an equity market rally into the Federal Reserve meeting at Jackson Hole at the end of the month. And I think at that point, people will start taking some risk off the table and getting ready for what the Federal Reserve announcement is. So until then, though, today's August 13th, so we should see, in the very near term, I think we're likely to see a pullback probably Monday, Tuesday, Wednesday of next week. But then after that, I think we should continue to glide a bit higher into the last couple of days of August, or at least before Jackson Hole. And then I think, the rubber will meet the road once we find out what the Federal Reserve has on tap in terms of hiking rates or leaving them as is.
Yeah, I mean, that's been a question that's been out there, and Jay Powell has been on record of saying, well, last time he left it, that they were just beginning to talking about raising interest rates at some point. Any thoughts on inflation and the weakening U.S. dollar here and how that might impact things?
Well, so, I mean, we've talked about our view. We're in a secular bull market in equities that has upside out to 2030. So we actually see U.S. dollar strength move in tandem with equities moving higher. So we think that this rally here in commodities might have a little bit more to go, but long term we remain cautious. So in terms of inflation expectations, we just got the CPI print a couple of days ago, and it was just as they expected. And I think they've talked about how they view this inflation as transitory. And if that is the case, then commodities have had a good run, and the risks are then more likely to be to the downside than to the upside.
Yeah, so you also mentioned a couple of things about value stocks versus the mega cap stocks right now in the rotation there. What would make you more comfortable going forward with the rally?
Well, the good thing that we've seen here over the last 2 weeks is sector rotation. So it was growth stocks leading, mainly the mega cap US growth names. But recently we've seen some rotation back into financials and energy as well. And that's what we've talked about, and industrials. And in our last note, we talked about the fact that yields, that was 2 weeks ago, look poised to move higher. And that's exactly what's happened here. So that should be a tailwind, especially for financials. And as long as we continue to see this sector rotation, should continue to be a tailwind or help to push equities higher. However, our longer term cycle work continues to be cautious towards the end of the year, as our work suggests that a bigger 4-year cycle reset is coming, and typically that's around a 15 to 20% corrective phase.
Interesting. Now let's bring it all back to Canada here. We tend to be a rocks and trees economy, or less. That's when I was growing up. That how we view the world. How are your thoughts impacting the TSX?
Well, the good news is that we've been in the secular bull market in equities since 2011, and we were in a secular bull market in commodities from, call it, 2000 to 2010. But the weighting of the resource sector in the TSX has gradually decreased, and we're getting more and more infotech and strong industrial names. So that if we're correct that commodities are going to come under pressure, that's going to be a bit of a headwind for the TSX. But the good news is we have so many other strong companies in, telcos, utilities, that should continue to help push the TSX higher. However, if we are going to see commodities come under pressure, then that should mean that the S&P 500 is going to outperform on a relative basis the TSX going forward.
Yeah. Okay. Well, hey, why don't we wrap it up there? Summer, still dog days of summer. We'll probably, let's maybe pick it up in October, last week of September, early October, and I think by that time we'll have a much clearer idea of where the world is at. But Javed, Mirza, thanks for joining me today.
Greg, thanks so much for having me.
Always. Bye.